should load, then it will show you. As you can see, they are many. So that's why one of the reasons you have to filter out. So from Sunday, the 23rd of June, this is what happened. That's the impact. That's 2 bulls. That means medium impact. And that's for USD. So Monday, June the 24th, at 1:30, we also had medium impact news. And they were for AUD. At 5, we had low impact news for NZD. Just like that. So what you will do is you'll go to the filter, then unselect, if that's a word, the low and medium, then remain with the high. Or you can also customize, even go through the types of currencies which you want depending on the country. Then after that, since now we are left with high, as you can see, the only box that has a tick, it's the high impact, 3 bulls. Then you go back, it should reload. As you can see, now we're only left with the news which have high impact, and therefore there are fewer news on the calendar. So we now continue to the readings. The readings I'm referring to are these portions here. These are since we are done with the other things, I have to explain to you what these mean. So let's just choose, let's just go with GDP. Let's just go with GDP for GBP. So I just clicked on it, then it opened. So these are the readings. You will see ACT, then cons, then previous. Let me go back. Here they are. Here they are written as ACT, cons, and prev. So this is the actual reading. The first one is the actual reading, and this is the forecast from investing. It's the forecast from investing. You can also have your own forecast. That's why it's necessary to do analysis, or you can have your signals provider or whoever, but then there'll be a forecast. There's a forecast for investing, then there's a forecast for you. You may use the forecast for investing to help guide you. Then there's the previous, that's the previous reading. That means the previous reading for GDP. The GDP was at 0.50. So when they forecast, the people at investing, remember they also do their analysis using the strategies, then they predict what the reading will be. You also do the same, then predict if the reading will have a weak effect on the currency or a strong effect, a negative or a positive effect on the currency. So then after investing, or you do your analysis, there will be an actual reading which will be produced. There will be an actual reading given. The reading is not from investing or from you, it's from the government or the statistics department of that area. They will give a reading that the GDP QQ for quarter 1 is 0.5. Then investing will show you, okay, this is the statistics, this is what they said. So you can see that it's possible for investing to be wrong. It's possible for you to be wrong with the prediction, but then the actual is never wrong. The actual is what they release. Investing just receives the news, then passes them on to you. So let's get deeper into this thing. Let me click on it. Just like I explained, we have the previous reading, we have the forecast from investing. You can also have your own forecast. Then we have the actual news. So in this case, investing was able to forecast it correctly. If you also had this forecast, that means you're correct. So the actual reading will be the one which has the impact on the market. The actual reading will be the one which has the impact on the market. So this is how these things work. And as you can see, importance, it's triples, it's high impact, currencies, GBP country, just like that. Then the source of report, this is where they got their news. like I said before, they will someone will give will issue out the statements or the statistics. This is the Office for National Statistics. The Office for National Statistics gave out the statistics for the United Kingdom Gross Domestic Product, which is the GDP. So for the interest rate, there will be another department which deals with interest rate, which will release the interest rate. So what you can do is you can also forecast. Investing can also forecast. Then the department will release. Then that's where you will see whether you or investing were wrong or right or whatever. So let's go back. Since now we're done with this, this was for this week. That's why you can see the actual is there. But then for future dates, for future dated events, you will see that the actual is not there, but then the cons and the previous are there, because the cons, remember, is the focus from investing. Then the previous is the previous statistics which were released. So right now, that's why if you look at the act, if you look here, there's nothing, because the actual readings will be given at the time specified. So for JPY, let's focus on JPY. For JPY, the Tankan Large Manufacturers Index will be released on Monday, the 1st of July at 1:50 a.m. That's why the act is not there. But then at 1:50 a.m. you'll see that the act or the actual reading is there, because they will have released the news. Then you will see movement on JPY pairs according to the news. So if they are positive, that means they will have a positive effect on the currency, and the currency will rise. If they are negative, they'll have a negative effect on the currency, then the currency will drop, because it makes the currency weak. So this is the app which we use. So you just check. If you're a fundamental trader or technical trader, just go to the app, because if you're a technical, you don't want to mix up with the fundamentals. So you check this app, you just go and check, okay, there's this news at this time, then I will have to exit my trade and enter fundamentally. Or if you're not into fundamentals, you just sit back, then trade where there's no news. But then if you're a fundamental, you come here with a different perspective, so that you can check. So you enter, the technical trader exits the trade, you enter the trade. So this is the app. So you can even see the dates up until July the 5th next week. You can also see the events and at what time. You can also see the focus from investing and the previous reading from the department which released the statistics. You can also do your own analysis, then forecast whether it will be strong or weak. Then when the actual comes, that's when we see the reaction from the market. So this is about it for this app. Okay, now we will be coming to the investing app. As you already know, it's for fundamentals. That part you know, and it shows you the news and for what currency those news will be. So now let's come to these things here, the actual forecast and previous, because there's a lot of confusion and a lot of misconception. So we'll start off with the previous, this one here. Let's just see the previous. The previous is the previous reading or the previous statistic released for that currency, and the news were for the German manufacturing PMI. So the previous reading was this one, 43.1 was the previous reading. So then there will come the forecast or the consensus. this is what is forecasted by or forecast by the labor statistics, or the people who will be releasing those news. This is what they forecast their reading to be. So this is what they forecast the news to, the reading to be. So usually when you get on the calendar, you will see the previous reading and the forecast for those particular news. So here they had a forecast of 43.1. So when the actual comes out, when the actual reading comes out, how it will impact the market. So remember, this is 90% of the time. We are speaking about 90% of the time. It's not always 100%. 90% of the time, this is how it will react. So if the actual reading comes out and you find that it's greater than the forecast, that means it's positive for this currency, this euro currency. That's positive or bullish for this euro currency. That's why right now you can see that it's colored in green. So if the actual comes and it's lower than the forecast, it will be negative for the currency and it will be in red. So we can also take the previous reading into consideration. We can take the previous reading into consideration when determining the impact, because you might find that right now, since as you can see, the forecast is equivalent to the previous, what they forecast is equivalent to the previous. So if the reading comes out greater than the if it comes out not only greater than the forecast, but greater than both the forecast and the previous reading, that means it will be very bullish. I hope you get what I'm saying. The bullishness will have high impact. It will be highly impacted strength. But then if you find that the reading beat the forecast, but then was lower than the previous, that means that it might be slightly bullish. So if it beats the previous and the forecast, that's where you will see action. That's where you will see the bullish action. So let's try finding another news release which was negative. Okay, yeah, like this one. The previous was 51.7 year on USD ISM manufacturing PMI. The previous was 51.7, then they forecasted 52.0. So that means they were forecasting growth, because from 51.7 to 52.0 is a growth of 0.3, around 0.3. So the actual reading was lower than the forecast and also lower than the previous reading. So if you go to the market, you'll see that the bullish impact, because it was bullish for USD, it was weakness for USD. The weakness was very great. The bullish impact was felt. So I hope you're still following what I'm saying. But then, had it been lower than the forecast but then higher than the previous, let's say a reading of 51.9, as you can see, it's lower than this number, is lower than the forecast, but then it's greater than the previous reading. It would still be bullish, it would be in red. No, bearish. Sorry, okay, I was saying bullish the whole time. It's bearish. Weakness is bearish. So I apologize. I correct the bullish, bearish, weakness, red, bearish. So the bearish impact would be there, but then it wouldn't be great because the forecast was the actual was not, yes, it was lower than the forecast, but then it was higher than the previous, so it would be bearish, but then at the same time not that very much. So let's look at future news. Tomorrow we have, let's go to AUD retail sales. You find that they've given you a previous, the forecast, then the actual. Since the news hasn't occurred, the actual reading will be there at 3:30. As you can see, the news at 3:30 a.m. So the actual reading will be released at 3:30 a.m. So if the actual reading beats the forecast, let's say 0.4%, 0.5, 0.4 going upward, you'll find that it will be very bullish or strong for the AUD currency, because 0.4% is greater than 0.3, which is the forecast, and also 0.1, which is the previous. But then if you find that 0.2, it will be bearish or weak for AUD because it's lower than the forecast, but then it might not be that much bearish or that much weak because it's still 0.2 is still higher than the previous. But then if you find that it's, let's say, 0.1 or 0 or negative something, it will be very bearish or it will be very weak for AUD, because not only is the actual reading lower than the forecast, but it's also lower than the previous. So this is how it is. A forecast is just what the department, it might be labor or let me just say sector, is forecasting for that particular release. It doesn't mean that it will be like that. It's just their forecast. So if a reading is greater than the forecast, then it's usually bullish for the currency. If it's lower than the forecast, it's usually bearish for the currency. Even if you can tap on, sorry for that, even if you can tap, you'll see just that my network is slow. But then they will also tell you, if you read this message here, if you read this message here, they will tell you that a reading that is stronger than forecast is generally supportive or bullish for the AUD, while a weaker than forecast reading is generally negative, bearish for the AUD. And that's that. I hope I've cleared everything.